In 2026, the world of investing has completely transformed in ways most people still do not fully understand. What used to work in the past is no longer reliable, and the rules that once built fortunes are now being replaced by faster, smarter, and more unpredictable forces. Investors in the United States are waking up to a new reality where markets move in seconds, artificial intelligence influences almost every decision, and emotional trading has become the fastest way to lose money. This is not just a change in strategy, it is a complete shift in how wealth is created and preserved. There was a time when investing meant patience. You bought strong companies, held them for years, and trusted time to grow your money. But in 2026, patience alone is no longer enough. The market no longer waits for anyone. News spreads instantly, algorithms react in milliseconds, and global events are priced into stocks before most investors even realize something has happened. A single announcement from the Federal Reserve, a change in interest rates, or even a viral news story can move billions of dollars within seconds. By the time a regular investor opens their app to react, the biggest moves have often already occurred. This does not mean long-term investing is dead, but it does mean timing and awareness have become just as important as holding power. Another major change is the rise of artificial intelligence in the financial world. In 2026, AI is no longer just a tool used by investors. It has become a direct competitor. Large hedge funds and financial institutions now use advanced AI systems that process millions of data points every second. These systems analyze earnings reports, global news, supply chain data, and even social media sentiment to predict market movements faster than any human possibly can. For example, if a company's production slows down in another part of the world, AI systems can detect it through shipping data or satellite imagery long before the company officially reports it. This creates a massive gap between institutional investors and everyday traders. However, the goal is not to beat AI, but to learn how to use it. Smart investors are now using AI tools to filter noise, understand trends, and make more informed decisions instead of relying on emotion or guesswork. Emotion has always been the biggest weakness in investing, but in 2026, it has become even more dangerous. The speed of information means fear and greed spread faster than ever before. A single viral post or breaking headline can trigger panic selling or sudden buying frenzies in minutes. Many investors lose money not because they are wrong about a stock, but because they react emotionally at the wrong time. The most successful investors today understand that discipline matters more than reaction. They follow structured plans instead of impulsive decisions. They set clear entry points, exit strategies, and risk limits before they invest. And they stick to those rules even when the market becomes chaotic. In this environment, emotional control is not just a skill, it is a survival requirement. Diversification has also taken on a completely new meaning. In the past, owning a few strong stocks was often enough to build long-term wealth. But in 2026, markets are deeply interconnected. A disruption in one industry can quickly affect multiple sectors across the globe. Technology influences banking, energy impacts artificial intelligence development, and global politics can shift entire markets overnight. Because of this, investors are no longer relying on single sectors or narrow portfolios. Instead, they are spreading their investments across different industries, asset classes, and even regions to reduce risk. The goal is no longer just growth, but stability. Modern diversification is about making sure that no single event can destroy an entire financial future. At the same time, there has been a major shift in what investors value most. In the past, the focus was mainly on price appreciation, meaning how much a stock could grow over time. But in 2026, cash flow has become far more important. Investors are now prioritizing assets that generate consistent income rather than just relying on price increases. Dividend-paying stocks, real estate investment trusts, and income-focused portfolios are becoming increasingly popular. This is because markets are more volatile than ever, and steady income provides a sense of financial stability even when prices fluctuate. Wealth is no longer just measured by net worth, but by how much money is coming in regularly. This shift is changing how people think about financial freedom, especially in the United States, where passive income is becoming the ultimate goal for many investors. Another powerful change is the role of information. In 2026, information is everywhere, but clarity is rare. Investors are constantly surrounded by news, opinions, predictions, and social media noise. The challenge is not access to information, but the ability to filter it correctly. Successful investors are those who focus on quality over quantity. They prioritize data-driven insights, long-term trends, and reliable analysis instead of reacting to every headline or viral opinion. In this new environment, attention has become one of the most valuable assets. The ability to ignore noise and stay focused on real signals often determines success or failure. Ultimately, investing in 2026 is no longer about finding a secret formula or a perfect stock. It is about adapting to a completely new financial system. The market is faster, smarter, and more connected than ever before. It rewards discipline over emotion, strategy over reaction, and awareness over ignorance. The investors who understand these new rules are not just surviving this new era, they are thriving in it. But those who continue to rely on old methods are slowly being left behind without even realizing it. The game has not just changed, it has evolved. And now success belongs to those who are willing to evolve with it.